This is the news, so it drives people like you nuts because your clients are watching Bloomberg surveillance.
They are.
And they're like, why is Tom blathering on about this? And yet we do it. How is the media and the day-to-day movement, as we've just done with John Deere, affected our investing world?
It's had a huge impact. You know, one of the things we were talking about a little bit in the break was how negative some of the guidance has been so far in the first quarter.
With John Deere, as we saw.
Yeah, one example, but we've actually had a fair number of companies come out and really reduce their overall earnings expectations for analysts over the next year and really even over longer term. I mean, I think this is what's scaring a lot of investors at this point. And to my point earlier, I think we see a lot of people want to take a little cash out of their portfolios and keep it during this very volatile and very uncertain time.
To both of you, is cash the new asset class? That's been a theme through the last 6 weeks. I mean, cash used to be something a mutual fund had that they were pained by.
Actually, we've been deploying a little bit of our cash in our managed portfolios and taking, some opportunities in fixed income, whether it's in investment grade or in some parts of the high yield market, and looking at some credit agnostic managers, because we've actually said so many people have been risk averse. They're stepping away from what will be very good 12 to 24 month investment opportunities. So we're doing the opposite and saying the pessimism has gotten a little bit too far, and actually we're redeploying a little bit into asset classes we had been underweight for some time.
If you're just joining us, Vonnie, jump in here. John Deere with ugly headlines. I mean, a forecast for the headlines have sort of stopped, but all you need to go see year sales down 10%. There's the success of John Deere as a proxy. To give you an idea, John Deere was so troubled 20 years ago, it was part of the Chartered Financial Analyst curricula how not to run a company. And it's done better than good.
Of troubled areas, Venezuela is one that's heading deeper and deeper into trouble. But we're a country that you're actually very interested in at the moment, Hans. Tell us about why. Is it a purely oil trade?
I mean, at some level, that's all Venezuela is. It's a call option on oil. It's a complicated call option. But you have two sort of blocks of bonds, the Republic of Venezuela bonds and then the oil company bonds there, PDVSA. They both have issues, some more PDVSA short-term debt issues. It's been trading at extremely distressed values, and at some level you have to make a decision whether, even if they have to default and restructure, if you're already at recovery values. It's not clear, but it's a kind of bond that will pop. If you see oil prices move $1, $2, you're going to get a run-up. Just like an oil equity in some fashion.
Hans Humes, thank you so much. Really interesting. Kate Moore, I love this pairing of the